everybody, and welcome to the 2 Levels Up channel. Today we'll be doing a video on the Ftse 100 2021 first quarter analysis. The information on this channel is for educational purposes only. Under no circumstances should the information outlaid before you be deemed, interpreted or acted upon as financial or investing recommendations. By watching our video, it means you fully understand plus accept our terms and conditions. You're also agreeing to the fact that you're fully capable of making your own sound and critical analysis of the information provided. First of all, guys, I'm sorry about the delay with this video. I did the prep work last week, but due to family circumstances and plus having a long 4-day weekend here in the UK, things just didn't happen as I wanted it to happen. But anyway, here we're looking at the Ftse 100 index. This is a long-term chart and it's a monthly chart. I wanted to bring this chart so you could see different levels, so we can get an understanding where we are now, where we may be possibly going, and how we may get there. So far, the first quarter of 2021 has been a mixed bag of results. Yes, we finished in a positive, and the Ftse 100 is closed higher for the first quarter. But as we look at this chart, this red bar here is January. The second time we tried to push up, but we closed slightly above there. That's February. The last month we just finished is March, and again we're below the February high, and we're also below the January high. We did make a higher high than February, but that March high is also lower than the January high. So basically February and March are within the range of January. So even though it's a positive close, it's one of those situations where you have to be cautious what's going to happen. Obviously, with hindsight, I could turn around and tell, yeah, the market went up this week. Yeah, I know the market went up this week. But I'm not talking about it from the point of view of this week. I'm talking about from the point of view from last week, looking back. As we look at this chart, this is going back to, I think, 2004, 2005. But we look at these levels here. This is the 2007 high levels. Look at the price action. Look at the collapse. Look at the recovery. And look at the collapse. We go back in the Great Recession of 2008, 2009, 2010, 2011, and we start recovering back, and we get to the top here. Look at the consolidation. Look at the battles between the bulls and the bears. We break it, we fall back. We break it, we fall back. We break it, we fall back. We'll recover, and we smash it to make the 2015 high. But this does not last. It's a 1 month, second month, and the third month we collapse and we go fall back below the 2007 high. The prices retract even further and further to reach this level, 5518.8. Now look at this figure, 551.8, and look how it interacted with the market last year as we recovered from the COVID market crash. It's very important, that figure 5518, because you can see here, you can see here, you can see here, and you can see here. Okay? It's a big number, and there's been a lot of battles around that figure. As the price recovered to break past the 2015 high, look at that close of that first bar. The market manages to push up, but it's running out momentum. Then again, it swings sideways before blowing out on this bar here. That's a 2018 high. Then it falls and collapses to go between the range of 2007 high and 2015 high. Then recovers and pushes up to create a newer high in 2019. The market, no, sorry, that's not 2018. The market collapses again and breaks the 2007 high to get here. When that recovers to create a new high in 2019, this 2019 high is lower than the 2018 high. That showed you that something was not right and the market was not liking these levels. Okay, 2018 high, sorry guys, because the picture's not well. 2018 high, this is 2019 high. The market collapses to go below the 2015 high, only for it to recover at the end of 2019 and at the beginning of 2020 to be sitting once again higher than 2015 high, higher than 2017 high, but below once again the 2018 high. When the COVID news and the lockdown started around the world, you see the major collapse in the price. And again, look at this price figure, 4781.22. Look at the reaction here and look at the reaction there. Even going back here to 2005, 2006 or 2004, whatever that is, look at the reaction there. Okay, the price recovers, what they call the V-shaped recovery. It bounced up and guess what? It hit the 2018 low, failed and pulled back. We got support at the 5518 level, recovered. Now we're here. This is November 2020. This is the move we've made in the last 5 months, 6 months. Okay, with such a rise, there has to be time for a pullback. There has to be time for a pause. There has to be time for profit taking. And this is what I'm presuming we're going to face in the next few weeks and months as we go towards the summer months. Okay, my Ftse 100 focus for the remaining 2021 is second quarter. We will see a range bound trading environment, and that is all based on the fact that we've had a huge run up. We're looking at nearly 20% increase in valuation from this low. Okay, the third quarter, of presuming guys, that we could have some sell-offs, profit taking or pullback somewhere around this mid-range here. The fourth quarter, I'm assuming that there'll be a bullish momentum to close at the all-time highs. Now, like I said, the all-time highs I'm talking about is 2019, 2018, 2017 highs. We need to get above there. Yeah, we will get above there, but there's still be loads of companies that are below the pre-2020 COVID levels. Okay, so even though the price might go up and reach this area, there will still be a large section of shares that are not where they are and they're still in recovery. And how the stock market or rotates itself, we'll figure out how we get there. But I presume we're going to be battling around this area here for a while before we go there. Okay, this year we broke the 2007 high, so we did breach that, and we was between the 2007 high and the 2015 highs. Okay, with my account, I have two different accounts. I got an investment portfolio and I got a trading account. So I use CFDs and I use spread betting as I'm based in the UK. In my investment portfolio, I own 46.8% in shares, 50.5% is in bonds, and 2.7% of my money is in cash, waiting for the right time to jump into the market. Okay, this shows a snapshot of my portfolio at the end of the first quarter. Okay, this is what the whole total valuation of my investment account is in how the money is split. And as you can see, I've got international shares, I've got UK bonds, I've got international bonds. I've also got UK shares, I've got cash equivalent and different strategies. But as you can predominantly see, I'm either international or UK based in terms of shareholdings or bond holdings. This next graph shows you how my shares account is broken down and how my money is spread across different industries. Okay, sorry about that. As you can see, the first top 4 or top 5, I'm pretty much diverse in different industries, and these are big industries anyway. Alright, so like I said, I'm positioned in a way where I take advantage of the stocks and I take advantage of bonds. Either way, I'm in it. This is my bond portfolio snapshot, and it shows you that 55% of my underlying holding is in bonds, and this is a breakdown of all the different bonds. Okay, my Ftse 100 shares trading account, like I've said, I trade in CFDs and I trade in spread betting. Okay, in the first 12 weeks of the year of activities, I've done £10,000 worth of profits. Out of the 12 weeks, I've had 2 weeks where I finished in losses. So basically, I got completely stopped out, wiped out, and whatever. And I took the losses, or I cut them, did the transaction myself, and I took the losses. I had 10 weeks where I finished in profits. After minusing all the commissions and all the transactional costs, I still finished with £10,000 profit. So all in all my trading account was a successful account. My investment account was also successful because I'm up 6% on my investment account for the quarter. Thank you for watching. Subscribe and like. Have a good day, guys.